Yeah. So anyway, let's bring Nick in here. We'll get another perspective here on yesterday's crazy trading action. We're going to dial in Nic Chahine here right now.
It was interesting. We had some of the comments yesterday. Anne Marie Band, mentioned that, was looking for some continued downside, looking for
Good
bargains.
morning.
Nic Chahine, how you doing today? Nic Chahine, he's a Marketfy Maven. His product is create income with option spreads. How you doing today, Nick?
I leave for 2 weeks and you guys break the market.
It's all my fault, Nick. It's all my fault because I wasn't throwing big bids out there yesterday to stop all these stocks from flash crashing off the hop.
I called you ancient yesterday. I
I
apologize for that.
know.
What?
He says he called me ancient wisdom because I was talking about the floor trader days and stuff.
Oh, really?
So he calls. I was like, I don't know how much wisdom I have, but I'm definitely am ancient.
What
I
was
feel
that on
ancient,
Twitter or
anyways.
something, or was that something in the chat?
On
It,
Twitter,
it,
we were just chatting on
Oh,
Twitter there.
okay. So,
oh,
Nick,
yeah.
did you create
Yep.
some income yesterday? How'd you do?
Well, I did not initiate anything new yesterday. I had a couple of nibbles via credit put spreads in the SPX, but they were low, just to generate some income. And obviously, if we had dropped some more, I would have needed to defend it somehow. But, I still am not sure that we're on solid footing. I don't want to be a nervous Nelly here. We were bouncing already before the rate cut, so we definitely had some overdone things yesterday. Like whoever bought Apple in the low 90s probably got the deal of the year. And because the drops were weird. I don't know about you, but my platforms were locked up. The quotes weren't accurate, and on several platforms. And I had no confidence in jumping into anything, even though I wanted to. I saw a lot of numbers that were pretty attractive, but I just couldn't do it because I couldn't rely on the information. Even though the drops were big, but there was no guarantee that they won't be bigger. Who's to say that it wasn't anything more sinister than actually, we had a full correction in one day. And I was looking at the NDX was showing like minus 8.5% at the open. And then if you calculate from the top, a recent top, to yesterday's my candles, the lowest candle, at the bottom of the candle, it's huge. It's like 25% probably. And in the Nasdaq, and something like 15% in the S&P and things like that. So it was a big move. It was like a flash crash and a correction immediately, and then we drifted down for the rest of the day. So it's something that you don't see too often. Obviously, even if you're ancient, you probably haven't seen this one before.
Now, that's one thing that, being in the market, you see different scenarios, different things happen. Nick, couple questions for you here. One,
Yep.
I know that when the market gets to extreme levels, you like to see, big rallies, you like to sell calls, and you're like, I'm safe. Going out when we got near, 2100, doing the 2150s or whatever. Did you have anything on, where you thought you were safe on the downside as far as selling puts or put spreads that you kind of had to skedaddle out
Yeah.
of? Okay.
Yeah,
Explain
definitely.
that.
Yeah. Even though I was safe in all of my positions, I had a couple. I didn't have many put spreads, credit put spreads, that is, which are bullish positions, which would have gotten under fire yesterday. I was heavily short for the whole year, and now I needed to reload, and I just waited one day too long to reload heavy short, but I was still mainly short. So for me, it wasn't that drastic financially. So if I had some pressure, they were easily moved because they were out in time. There was nothing expiring this week. That's where the problems happen. So say you had a credit put spread in the low 1900s for the SPX. Even in hindsight, it might survive with today's bounce. Like if you had something around a 1930 credit put spread, if it expired this week, yesterday you got priced in pretty strongly in a bad way. So something you collected, let's say 50 cents or 60 or 70 cents for, suddenly is priced at $4. So you took a big hit there because it was in the week it's expiring. That's why I like to play longer term. So yes, you get priced in, but maybe $2 instead of 4. So you still have a chance to move it down for a small loss and save the trade.
Nick, also,
Nick,
I want to just hop in here, Dennis, with one more thing. Nick, you talk about, follow through moves, and I saw your article yesterday about not buying calls in this environment. for many reasons here because of the jacked up premium. Could you just recap that article for us?
Yeah, that was from Friday, saying that I was itching to get into everything because it seemed like a good deal. And guess what? On Monday, I would have lost my shirt on it because everything was a much better deal. So everything seemed like a good deal. I wanted to buy calls everywhere. I did buy a little bit here and there, but lottery money really. And I was basically saying patience because we don't know why we're falling exactly. We have speculation that it's this and speculation that it's that. But we were like dying by too many cuts. I won't say 1,000 cuts. There were at least 3 or 4 big cuts that we were falling on. So I wasn't sure what was taking hold. And Monday, consensus was it was China, jitters. Well, maybe it is, but is it all China? I mean, what about September 20th election in Greece? What about the potential rate hike in September, which is less likely now, apparently? So we still have other things that might be scary, but we may have did it yesterday. But my point was don't rush into everything because it seems like a good deal. So patience, because I like to trade on fundamentals and clarity, and clarity includes what the sentiment is, and I don't know what the sentiment is because nothing really changed. We knew that China was a mess and a mystery. We didn't learn anything new to tell us otherwise. We didn't. We don't know what's going on over there with respect to what's real and what's not as far as numbers, but that has been the case for years. So that's nothing new. It's just that how we perceived it, suddenly we decided, we got to sell everything because China is a mystery. But this was part of the thesis. So nothing changed for me fundamentally, but I needed to know where's the commitment from the trader or from the markets.
Nick, speaking of China, did you see the move in Baidu yesterday at the open? BIDU went all the way down to $100 even. We were just talking on the show when you see these stocks go right down to the even number. It's probably because there's some type of institutional order that was sitting there and it just bounces off that order. But holy cow, that lost 45 points there yesterday and then got it all back. It got it all back, BIDU. Came all the way back. Now we're up here again at 148.55. What are your thoughts when you see a stock fall 50 points and then the next day bounce it all back?
I wish I had seen it yesterday. No, I did not see it. Oh my gosh! I posted a heat map yesterday that is the reddest I've ever seen, and it got a lot of ping action on StockTwits from Howard and everybody else. Yeah, so it was too. I told my people I'd like to cover the stocks that are on the move, but it's everything. I would need like a 3-hour video, and I might still do it in the next couple of days, but I was sidelined with a migraine, and I was just wanted to go through everything because, like you're saying, Baidu, I have to zoom out the 5-year chart to see what level it fell to. And indeed, it fell to a 2013 July area of pricing from Baidu. So, yeah, that's an incredible move and may have been an incredible buy. And also, I'd like to point, you guys talked about Apple. We have to talk about Apple. Yeah. Yes, it may have been a good deal at, the low 90s, but I was itching to say something on Twitter, but didn't because I didn't want to pile on negative stuff on top of a negative day. Apple at around 100, that's the old 700 level from which it fell from grace. We thought that was the top a few years back, and they cut it 40% from 700. Yep. So I was like, sounds like a great deal at 100, but wait a minute, that was the 700 level from which they cut it 40% down to like 380 or 390 or something like that. So I didn't say anything about that because I didn't need to pile on negative to put more doubt in people. And I have to give Kramer some credit for reading that letter that kind of gave some people some assurances that, hey, maybe Apple's not dying in China because that's the perception. That was the sentiment. The fundamentals in Apple didn't turn in a few weeks, but suddenly everybody's talking about, oh, my God, in China it's losing, Xiaomi this and all of that. And I'm thinking to myself, how many phones do they have to sell before you guys believe in it a real deal? So its sentiment does a lot to the markets, and I need to see where they're committed sentiment-wise. This is sentiment and headline trading right now.
Let's take a longer-term perspective, get away from the sentiment, get away from the headline trading, and just look at Apple here at 108 this morning. 5 years from now, do you think the stock price of Apple is higher, Nick?
I think so. It would take a real bonehead move on their part to
Like
mess
iPhones
that up.
cause cancer or something.
Something crazy, maybe another headphone company or something like that. I don't know, but I was long Apple with credit put spreads, and I didn't budge them. So they were long distance in the 90s. I was like, hey, I'm not going to even move that one. So it's as sure a thing as I have. Like I always say, if I have to worry about the value of Apple, I should close shop because nothing is safe in this market. Because it trades almost 10 maybe after
Plus
yesterday's
200
move.
billion in cash.
I mean, if I cannot risk money on Apple, there's nothing you can risk money on.
Yeah.
Really, from the logical perspective. Not that I love Apple. I've never, I'm not a fan of Apple. Trust me, the products. I mean, they're good products, but they're not for me. So I'm not like the Apple fan out there. But from the value perspective, like yesterday, Green Mountain was green and Apple was green, and I'm thinking, and GoPro was green at one point. It's like, where's the relationship there? I don't know what's going on. The whole market's red. You got green Apple, green GoPro, and Green Mountain. So it's strange how people trade things, but it's a lot of sentiment and a lot of headlines the last few days. And for credit spreads, these are the enemies of credit spreads. So even though I have accurate ranges during the week, but when we have headline trading like that, everything goes out the window, and I put on hold all new initiation of trade on confidence. Like when I'm confident with a trade, I put it in size and I manage it. But when I really don't know what's going on with the sentiment and the headlines, I'm at a disadvantage, and my theory doesn't work, so I'm on hold, and I just manage.
Nick, Terry Kern in the chat here is just asking you, you just mentioned GoPro. He just wants to give your technical look here on GPRO. Obviously, a big washout day again yesterday, and so many different stocks got down to 42.75. Now we see it 9 points higher than that level at 51.25. What are your technical thoughts on GoPro?
I was a little bearish on it because of the technical coming down to around 55. I thought it needed to hold 55, and I had two lines that intersected there. They were one was an ascending trend, and it broke it, and the technical target was in the 40s. And my last note was literally, I'll read it to you. Well, it broke both red and green lines. Those were the lines that kind of intersect around 55. On my chart, and I said the green box is the target, which was 47.5. And I said if it loses that box, then 40 can come next. So yesterday it came pretty close to 40 because it lost the green box. But I can't take credit for that because yesterday's washout was just a huge downtrend for everybody. But I thought it needed to hold 55, and 4 days ago it lost it and then hit both my targets on the low end. So now if you're a fan of GoPro and you say I want to buy a GoPro, and assuming markets hold up here, then I won't say, okay, you're just buying a story that's not there. I wasn't a fan of GoPro up at 90, but if somebody wants to go along it down here and trying to catch a knife, I mean, it makes more sense down here than at 90 or 60.
Nick, let's talk about some strategies for the remainder of the week here. We have 4 days left. I was looking at some of the premium and some of these weekly options. Just astronomical here. So obviously buying them, you're really going to need some quick moves here. Selling them, you're leaving yourself to exposure here. We bounced 100 points off the lows. I'm kind of looking at this and maybe, and I just go by the SPEW futures because they trade so much when the cash is closed. But I think you're shaping up for a 1900 to 1950 battleground here. Maybe over the next few days. What's your take on the market? Are you getting, what would make you super bullish and what would make you super bearish?
I'm not super bearish because there's nothing new that came out that I didn't know a couple of weeks ago or a couple of months ago or even 6 or 7 or 8 months ago. So I'm not bearish from that perspective. I do fear sentiment bearishness. There's a difference there. So I was actually literally typing up my morning note. And I'm saying, you may have bought protection yesterday. I won't be so quick to sell it this morning in case we revert lower and we give up some of those gains. And maybe I definitely won't. I'm not initiating anything new, big on fundamentals, because I still don't have clarity as to, okay, this was it and that was the reason, and we're moving forward from here. And technically, the markets are still lined up for support, which is higher than here, so upward pressure. So there should be upward pressure definitely above 1900, but it's not a guarantee. I mean, yesterday we had that same upward pressure, yet we were in the low 1800s. So I can't count on my usual metrics to get me into new trades. So I will manage the existing trades, and I will refrain from committing to big size bounce trades. I nibbled on credit put spreads at the lows yesterday. I won't add to those, and I probably won't take off most of the protections I put in place, which are usually debit put spreads here and there, just to offset some of the trades that may be taking heat. But as I'm happy with my portfolio, meaning I don't have any crisis in my portfolio to manage, I just need to be cautious.
Okay, caution is always a good word. Is there any stocks? I mean, I know some stocks hit some crazy levels yesterday. Do you think those levels, like some of these lows, are going to be ever seen again? I mean, you take your Costco traded down $20, Pepsi traded down 20 some dollars, Ford goes from 13.5 to 10.44. I mean, what if people are looking to bring in some shorts or get long at those levels? I mean, do you think it's just achievable? Do you think we can get back down there?
I'm not sure, but Dennis could probably answer this a little better as far as, are all of these prices real? Did it happen? Like I saw a tick on Apple at 90. Did it go down to 90?
92.
Well, my candle showed 90 at one point. So I know that some of these prices may have not really occurred. They may have just shown up somehow. I know
Well, they
somebody was
occurred. Not the 90 on Apple, but I'll tell you, Merck was down 10 points. Pepsi was
yeah.
indeed down 20 points. General Electric was indeed down over 20% at one time. I was just chatting on Twitter,
Wow.
and some people were saying this wasn't a flash crash yesterday. Guys, this was absolutely a flash crash. The reason it didn't look as bad as May 6, 2010 was we had circuit breakers kicking on a lot of different
Yeah.
issues there. So that's the reason it didn't look like we didn't see stocks going down to a penny.
I,
But
I
that
think
being said, yeah, go ahead,
I
Nick.
think I think it happened in the pre-open, and that's why it didn't happen as like, oh my gosh, what did just happen? Because it just happened in the pre-open and then at the open, kind of like, hey, we're gonna have a flash crash. Kind of the pre-open showed us when we dropped, from minus 50 to 70 to 80, however it was, and then we opened and then. Whew, but it was 1,100 points almost. That was in the Dow. That was just amazing to watch. So I think if you were lucky to get them down there, you got some, great deals. But I don't know if we're going to go down and revisit that. Like I said, I have no clarity with respect to sentiment, market sentiment, and its commitment to one way or another. I told my guys and girls yesterday, don't start new shorts at these lows. Don't assume we're going lower and start selling calls and call spreads, because you don't know what's going to happen. And sure enough, we snap back hundreds of points in minutes. So I have no belief in how the market sentiment is going to commit to this malaise. Is this malaise, or is this really the correction? Well, for me, we had a correction that's deeper than the October correction in yesterday's move. So mathematically, it's deeper. So, and in fact, we almost got to the levels of October, and we may have actually on some things. Didn't the Dow hit the same level or lower? But
I didn't even look at how the Dow, I think, got down to the lower 16,000s. We've been on the line with Nic Chahine. He's a Marketfy Maven. He joins the show every Tuesday to discuss this week's options outlook. Look for his product on Marketfy. He's the author of Create Income with Option Spreads. Nick, great information as always. Thanks for coming on. We'll talk to you again next Tuesday.
Great to be here.